How much car insurance do you need? Topic 4. Easy steps. Did you know that millions of drivers are either paying too much for car insurance, or worse, they don't have enough coverage when an accident happens? Choosing the wrong car insurance coverage can cost you thousands of dollars. But the good news is, figuring out how much car insurance you need is much simpler than most people think. In this video, I'll show you 4 easy steps to help you choose the right amount of car insurance and avoid expensive mistakes. Let's get started. Car insurance isn't just a legal requirement in most states, it's also what protects your finances if something goes wrong on the road. If you have too little coverage, you could end up paying out of pocket after an accident. But if you buy too much coverage, you might be wasting money every single month. So how do you find the right balance? Let's break it down step by step. Step number 1 is understanding liability coverage. Liability coverage is the part of your insurance that pays for damage or injuries you cause to other people in an accident. This usually includes bodily injury liability, property damage liability. Most states require a minimum amount of liability coverage. However, the minimum coverage is often not enough to fully protect you. For example, if you cause an accident that results in $50,000 in damages, but your policy only covers $25,000, you could be responsible for paying the remaining $25,000 yourself. That's why many experts recommend choosing higher liability limits if you can afford it. Step 2 is considering the value of your car. 2 types of coverage come into play here. Collision coverage, which pays for damage to your car after an accident. Comprehensive coverage, which pays for damage from things like theft, fire, or natural disasters. If your car is brand new or worth a lot of money, having both coverages is usually a good idea. But if your car is older and only worth a few $1,000s, paying for full coverage might not make financial sense. In some cases, dropping collision and comprehensive coverage can save you hundreds of dollars per year. Step 3 is choosing the right deductible. Your deductible is the amount of money you pay out of pocket before your insurance starts covering the rest. For example, if your deductible is $500 and your repair bill is $2,000, you would pay $500, and the insurance company would cover the remaining $5,500. Here's the key thing to remember. Higher deductibles usually mean lower monthly premiums. Lower deductibles usually mean higher monthly premiums. Many drivers choose a higher deductible to reduce their monthly insurance cost. But make sure you choose a deductible you can afford if an accident happens. Step 4 is protecting your assets. If you have savings, property, or a high income, you should strongly consider higher liability coverage. Why? Because if you cause a serious accident and the damages exceed your insurance limits, the other party could potentially sue you. Higher liability limits help protect your savings, home, investments, future income. In other words, the more assets you have, the more protection you may need. Before choosing a policy, always compare quotes from multiple insurance companies. Prices can vary dramatically between insurers for the same coverage. You should also ask about discounts such as Safe Driver, Multi-Policy, Good Student, and low mileage discounts. These small savings can add up quickly. So, let's quickly recap the 4 steps to choosing the right amount of car insurance. First, understand liability coverage. Second, consider the value of your car. Third, choose the right deductible. And fourth, make sure you're protecting your assets. Following these steps can help you avoid overpaying while still protecting yourself financially. If you found this video helpful, make sure to like the video and subscribe to the channel for more tips on saving money and making smarter financial decisions. And let me know in the comments, how much are you currently paying for car insurance? Thanks for watching, and I'll see you in the next video.